So one of my favorite setups and something I think you should really be focusing on in 2019, 2020 and forward is looking for the best breakouts. Now, you can't buy every breakout. You gotta line up as many criteria as you can. And today, I'm gonna talk about 5 things you should avoid when it comes to buying a breakout. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to subscribe and like the video to be notified as soon as a new video drops. We do a lot of videos every week. I want you to be there as soon as it hits, especially to catch those live videos where we break down the charts real time. So today, I'm gonna talk about how to avoid false breakouts. You can't buy any stock that's at multi-week, multi-month, multi-year highs. But if you avoid these criteria, you're much better positioned to find that one breakout that does continue to move through the day, through the week, through the month, etc. So first thing I want to talk about is volume. I mean, price, everybody says, I say this, I stole it, but only price pays. You know, price action is what matters. But really close behind, I mean, it's a close second, is volume. Look for high volume breakouts. If you're buying a stock this stock could be at all-time highs, 20-year highs, maybe even longer. But if it's breaking out on average or even below average or maybe slightly above average, you want to try and avoid those because odds are there aren't enough buyers to continue the move. Remember, the stock market is about mania. It's an auction. The more buyers, the more eyeballs you have, the more likely that move is to continue. So if you're just trading at average volume, that's telling you that there's probably not any new buyers. So tomorrow, when the stock is sideways, who's there coming in to buy this stock? The next day, the next week. So if you don't, or if you do trade breakouts without really high volume, way above average, you're gonna end up in a lot of sideways stocks. Now, sideways isn't a bad thing. You can always stop out for a small loss or a small gain or break even, but it can get frustrating over time. So the tool I use in StocksToTrade, and this is in pretty much any charting package, I look at the 60-day average volume. And that gives me a good snapshot over 60 days, 2 months, that, you know, if the stock I'm looking to buy as a breakout, if it's not trading double, 5 times, 10 times that 60-day average volume, I'm going to look to avoid it. So focus on volume and price, but don't ever forget to look for high volume. Second thing I want you to focus on is try not to buy breakouts that don't have news behind them. You know, you can run your scans, you can do your charting, and you can see these stocks that the charts are beautiful, okay? I say all the time, you should be looking at charts till your eyes bleed. Look at all these charts. Focus on the clean charts, and we do a lot of, when I talk about clean and choppy charts, there's a lot of videos in the archive, you can check those out. But one of the biggest things that happens is if there's no news, what is the potential, just like I talked with volume, what's the potential that more buyers are gonna continue to step in? You wanna have some meat, something that people get excited about. And I really want you to focus on substantial news. That is earnings, okay? Earnings season, one of my favorite times, 4 times a year. As a new trader, you should be focusing on earnings season. Look for those stocks with earnings today, trading on high volume. The other thing you want to look for is, you know, big name type stuff. You know, something we always talk about is like cancer headlines or, something that's in the headlines that day. So whatever is going on in the world, if a company releases a product or a press release tied to this big news event, that is something you want to look to trade. You know, day traders move as a herd. So really look for those substantial things. Avoid no news, avoid vague news. Something I always kind of mock is the press release where there's a lot of shoulds and coulds and woulds, and they don't name the partner. They don't, there's no dollar amounts. It's just kind of fluffy pie in the sky. If you're looking for consistent breakouts, avoid that type of news. Focus on earnings and big name contract wins, products, and sectors as well. Third thing that I want you to take in consideration is try to avoid stocks that aren't in a hot sector. Listen, one of the great things about the stock market is you will never get bored, okay? Every single day you show up, there's a story, there's a theme, there's something going on. And almost always there's a hot theme. So if you can start to line these things up, high volume, has news, breaking out, and it's in a hot sector, whatever that sector is, low floats, medical devices, Bitcoin, weed, cancer, Ebola, all these things that have moved stocks in the past. You're building that case. And the more things you can line in your favor, remember, if you're under the PDT, you've only got 3 trades a week. You got to focus on the best of the best. So focus on those stocks. When you're ticking off your items, look for hot sectors, look for hot themes of the day or the week, the month, etc. Fourth thing to avoid, and this really applies to afternoon breakouts, which are my favorite breakouts, is try to avoid buying that stock to gap it overnight if it's under VWAP, okay? A lot of these stocks that have the first 3 components I talked about, volume, sector, news, they'll spike early, and then they'll kind of fade through the day. Now, check out VWAP, volume weighted average price. We've got a ton of videos on it. It's my favorite technical indicator, but you might be tempted to buy that stock because you've ticked off those 3 boxes. But if it's under VWAP late in the day, I'm telling you, most of the time, that stock's probably gonna open weak the next day, then it might bounce midday, late day. So what I want you to avoid is buying that stock under VWAP because you might just be able to buy it at a better price the next day. So not a hard set, never do, but I want you to just kind of sit there as you're thinking about things. Okay, I'm gonna put my hard-earned money on the line. I'm gonna risk money because you can always lose in a trade. Do I really wanna buy this stock, this breakout, when it's under VWAP into the afternoon? Next thing, and this is a simple thing, but look at multi-year breakouts. Look at your 1-year charts, your 5-year charts, your 10-year charts. And sometimes, and actually I want you, big thing is I want you to look at that 1-year chart, because something I noticed with a lot of newer traders, they might be looking at a 5-day chart, a 1-month chart, a 90-day chart, and on that time frame, it looks like a breakout. But you got to zoom out and look at that 1 year, that 2 year, that 5 year. I typically don't go beyond 5 year. By that point, the cycle is completed, but look for resistance points on that multi-year chart. I'm not saying you have to go back beyond 5, but go to 1, go to 2, go to 3, go to 5, and look for, especially if you've got an area of long-term consolidation. Say it's 2 years ago, the chart looks clean on the 1 year, but it's spiked into that consolidation area from 2 years ago, and it's, say, $5, stock spiked to $5, and there was a lot of consolidation and resistance that built there. That's something you want to avoid, because odds are, if that consolidation area is built, the stock dropped, ground back, you're going to have a lot of sellers that are finally back to break even. They're going to say, man, I've held this stock for 2 years, I'm finally back to break even, I'm going to sell. And then that creates a failed breakout. So, biggest point, last point, focus on those multiple time frames. Don't look, listen, if you're looking to overnight or swing trade a stock and you're looking at a 1-month chart or a 2-month chart, you're gonna buy a lot of false breakouts and you're gonna get frustrated and say buying breakouts doesn't work. But if you avoid these 5 things I talked about, your potential for success is much higher. So let me know in the comments below, have you bought breakouts? Has it worked for you or hasn't it? Buying breakouts is one of my favorite things to do in this post-2016 world. So many of these stocks hit those key levels and keep going. So give me your comments below on breakouts, and I look forward to seeing you in the next video. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.